You and I know that the majority of traders lose money. And it's not because they're stupid, it's often just because they've overcomplicated everything. But what if I told you that there's a way to beat 90% of traders completely on autopilot? I'm talking no fancy setups, no screen time, no stress, you just make money. Over the last 3 years, I've saved over £100,000 with this strategy completely passively. First, let's look at the facts. 90% of traders lose money or blow their accounts in the first 12 months, which is ridiculous. And I can't help but think, why? Why is this? Why do so many traders lose money? And I think it's down to poor trading psychology, which stems from a need to get rich as fast as possible. They trade emotionally, without discipline or any money management whatsoever. And when they blow their account, when it doesn't work as fast as they'd like, they go to the next get-rich-quick scheme or the next trading strategy. I'm familiar with this feeling of being time poor, you know? It's a really strange feeling. It's like, if you don't succeed right now, something bad is gonna happen. And that's a really toxic way to live your life, because every day is not going to be good enough and your life is just going to pass you by. And I get a lot of comfort in reminding myself that I don't need to be rich right now. I just need to work on my goals consistently and enjoy the process as much as I can, thereby, enjoying my life along the way. Considering this slow and steady mentality that I've just prefaced there, by far the easiest way to beat 90% of traders is just to invest in the S&P 500. Whether you're a trader making 40% a year or not a trader at all, there is no denying the beauty of this strategy. There's no time in the markets, there's no checking the charts, it's just simple buy and hold. Since its conception, the S&P 500 has returned 10% a year on average, which is literally better than most hedge funds and 90% of traders. And even if you're a trader that makes 10% a year or more, you should listen up. So I'm a trader and my max drawdown is 20%, which means at any given time, 80% of my trading account is just sitting there doing nothing. So why not take out half of the money of your trading account, start risking 2% per trade instead, and use the other half of your account to invest it in the S&P 500. This way, I'm still getting my yearly returns from trading at the exact same rate, but I have half of my trading account invested in the S&P 500, passively earning me an additional 10% per year. So I hope I've got you interested in investing in the S&P 500, especially right now, because obviously the markets have just crashed like 20%, so it's a great time to get started. So if you're interested in doing this, the best place to start buying shares of the S&P 500 is with Vanguard. They have the lowest fees in the entire industry and they literally invented index funds. So there's no denying that they're the best place to invest. There's also one other thing. If you're in the UK, you want to set up a stocks and shares ISA. And that's because you can invest 20k a year in there, completely tax-free, and all capital gains within that ISA are completely tax-free as well. So it's just perfect. Every month, regardless of the S&P 500's price or sentiment, just buy a set amount and do it every month religiously. I know you're probably a trader, and I said this in another video, but there's no point whatsoever trying to time the tops and bottoms. There's so many studies out there where even if you bought at every market crash ever, it does not beat just buying every month consistently. And that's because time in the markets beats timing the markets. So just stay in the markets as long as possible. That's the best approach. The best way to set this up is just to do a direct debit. So every time your monthly salary comes in, you have half of it go into Vanguard. So here's an interesting thought for you. If investing in the S&P 500 is so good, why aren't more traders doing it? Well, it's because it's so boring, and that actually requires a lot of discipline. As I said before, everyone is so tunnel visioned on 10xing their money and hitting these home runs that they ignore the easy investments. In fact, they struggle to do the easy investments because they're not fun or exciting enough. And obviously, investing isn't supposed to be fun or exciting. I think a lot of people feel like investing in the S&P 500 is too slow or takes too long, so they just never get started. Instead, They focus on meme coins and, high risk investments. And by the time, a few years later, by the time they've seen the returns of the S&P 500, the really safe, easy investment, they'll be kicking themselves, and then they double down on these high risk investments even more. And they spend their life in like this boom and bust cycle, just getting nowhere. Whereas they could just be doing the same thing every month. And I know it's boring, but it works. It works so well. Every month I put 60 to 70% of my income in the S&P 500, and that's how I built the bulk of my £100,000 savings, not from one magic trade or from one magic investment, just boring buying the S&P 500 every month. So considering this easy investment strategy, if you're maybe newer to trading, is it still worth learning how to trade? And I'd say yes, if you're passionate about it. I still trade. I got my results here. So in 2023, I made about 85% profit, and the S&P 500 would have returned 24%, so less. In 2024, I only made about 15% profit, whereas the S&P 500 made 23% in 2024. So in that case, the S&P actually made more than my trading. So you can see it's good to diversify. You can make a lot of money in trading, particularly if you're trading prop firms like the 5%ers, who are actually sponsoring this video. If you're a consistently profitable trader and you're looking for some funding, I'll leave a link to the 5%ers down below. So I'd say trading is more high risk, high reward, whereas investing is more low effort, long-term wealth building, And you don't have to choose one or the other. You can literally do both. So if you're watching this now and you're thinking, maybe I'm not ready to trade, well, just buy the S&P 500. Just buy it every month at the same time, do it consistently, never sell, don't worry about timing the market, and that is the lazy way to beat 90% of traders. So if you enjoyed this video and you'd like a deeper breakdown, let me know in the comments. Maybe we can go through Vanguard together, or we can do a deeper analysis of the S&P 500. That could be fun. If you've made it to the end of this video, comment with this emoji to show me that you made it to the end, and thank you very much for watching. If you're new to the channel, make sure to subscribe and leave a like, and I'll see you soon. Thank you, everyone.